Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of May the 23rd, 2016. Now to get started, we're going to begin where we always do with the US dollar index, a major player in the current market environment. Now we have the Fed talking about a potential rate hike in June. That's likely going to have a negative effect on the equity markets if the market believes that the Fed will actually raise rates. So it's a fundamental that we need to be aware of going forward. Now we can see that after the Fed announcement right here on this particular bar, we've had a big move up in the dollar index, but subsequently we have not had a lot of follow through off this 95 level. So if the market really believes the Fed is going to raise rates, then we would see the dollar continue to rise, and that's likely going forward for at least the next few days. But we do have some early warning signs from the main VantagePoint indicators. Now, our long-term predicted difference, which is this indicator right here, is telling us that we are moving into overbought territory. We can see very similar signals from the VantagePoint software when the triple EMA cross had completed, but once we hit a double top in place, the market subsequently moved aggressively lower. So we do have a very similar setup right now. So I'm not saying the dollar is going to sell off immediately, but I'm saying that there is definitely warning signs. Now our key VantagePoint level comes in at the 18-day predicted moving average, which is 94.53. As long as the market's above 94.53 next week, it's predominant. The dollar is considered predominantly bullish. Now our predicted RSI, again, we can see a very similar setup as we did here just a few short months ago. That is, the predicted RSI also moves into heavily overbought territory, that we could have issues here with upward momentum on the dollar index, because again, this is more of a fundamental play than a technical one. And so when we have fundamentals like this, the market tends to initially overreact to the initial statement or announcement, and in this particular case, that very well could be what's happening. So when we look at the S&P 500, what we want to look at, we can assess here that essentially on the last time we've had this rate hike, and this is the only rate hike we've had, I think, in the last 7, 8, 9 years out of the Fed, this had a very negative effect on the S&P 500. So the S&P 500 this coming week really is in a make or break area here. Now, our predicted short, medium, and long-term differences, they're they're very, very close to the to the levels that we would look at for a trending move, but it just can't seem to get moving. So when I'm looking at this, what I'm going to do is I'm going to bring this back into the 3-month time frame so everybody can see it. Again, that key VantagePoint level that we really need to focus on here, that I think most market participants misunderstand, is that as long as we're below this critical VantagePoint level of 2056, the predominant bias for the S&P 500 is down. Now our neural index here is up, and we can see our strength indicator is up, but our predicted short, medium, and long-term differences remain below the zero line, which is very important for a potential trending move. Now our trend line support comes in at or about the 2035 area that I talked about last week, and that area continues to hold. So we look for this area to hold. If it doesn't, then if we break this trend line to the top side, which is at about 2065, the correlation between the S&P 500 and the US dollar will remain in place, and they will both move up together. But if again, that rate hike is a fundamental wild card that basically the software cannot basically definitively say which way, if this correlation is going to continue. It depends on how the market reacts to that. And again, that's an outside fundamental here. So watch our trend lines at 2065 and watch the lower trend line at 2030. If we lose 2030, guys, we are going to see a trending move to the downside on the S&P 500, and the dollar will likely continue to push higher. Now, when we look at more of the international equity markets and how they relate, the DAX 30 is predominantly related to the euro. The DAX goes up, the euro goes down, and vice versa. That's just a fact that I've shown here on these webinars many times. The correlation, the inverse correlation between the DAX 30 and the euro US currency, or even the dollar index if we want to take it one step further. So right now we see a very similar setup on the DAX that we do to the S&P 500. So when I look at this, our key vantage point level comes in at the 99.60. We've closed the week at 99.09. That's a very bearish close. So once again, this is warning us that these global equities could be getting ready to push lower. Now, in my respectful opinion, that doesn't mean that oil is necessarily going to follow it here. Because again, this is about interest rates. So the commodity, the normal correlation that we've seen between oil and the S&P could completely break down. As the S&P 500 crashes, we could see oil push higher. But again, I still say we're in that primary range here. We can see it. We've got a new trend line resistance here just under the $50 mark. Our lower trend line coming in at 46. But the key number we really want to watch here, guys, is that key vantage point level, which comes in the 18-day predicted EMA, which is at 46.52. So as long as the market is above 46.52, then it carries a predominantly bullish tone to it. But we have, again, formed a new trend line off the 48 level, which is your current resistance you want to watch. So again, in my respectful opinion, we're going to remain trapped between this just under $50 per barrel and the vantage point key level at 46.52. A break on either side of that could trigger potentially, again, a trending move. So these are the key levels you really want to watch here, guys. Now, when we look at gold this week, again, the gold, my position is that gold will have very limited upside in 2016, and that's simply because we're caught in these, in the Fed's rate hike cycle. So as long as interest rates are going up, gold is not going to be going up here, guys. That's the fundamental that causes problems. Now, the key vantage point level we're looking at here, 1267.15, we can see that we've closed below this critical vantage point level. Our neural index remains down. We can see that our predicted short, medium, and long-term differences are not oversold. It has room to extend to the downside. The predicted RSI sitting at 37.1 suggests that we are building downward momentum here, supporting dollar longs, at least for the first part of the week. So when we combine all of these indicators together, along with this critical vantage point triple EMA cross, which has taken place right here, that tells us that we are probably going to move considerably lower in gold, at least in the near term. So again, when we have the gold moving lower, we have this, our main first currency, we have the euro moving lower. So remember the correlation there, guys. The intermarket correlation that we always look for is, on these currencies is which commodity, which equity. Oil, what's it correlated to? Well, the euro has always had a very high correlation to gold. Right now, the key vantage point level that I want to draw everybody's attention to is 113.13. I talked about this in last week's Forex Weekly Outlook, outlining this key level up here around 113.42 that we would be selling into last week, and that has come to fruition, and that the euro has extended lower. We've pushed through the trend line support that we had right here. Again, that was supported by the vantage point indicators in this section right here. The neural index down, the predicted short, medium, and long-term differences, along with the strength indicator breaking to the downside. Again, as did the predicted RSI. Now, once again, I think the euro will see further downside, but I don't think it will see aggressive downside. So we want to be a little bit cautious here. Our long-term predicted difference, which is a critical proprietary indicator from VantagePoint, is starting to flatten out here. So we'll watch for a potential reversal, but I don't think that's going to be until midweek. So right now, clearly we have a downside bias on the euro as long as we have, essentially that DAX 30 below the critical level that I talked about, and as long as the dollar index continues to push higher. Now, this could have a very negative effect here on US Swiss franc going forward also. I think initially to start the week will be positive, but we could run into some problems here if those equities start to sell off. Now we can see last week we've got just going to remove this here. We'll take this off. We can see we have a trend line break in this area right here, and we've had a big push to the upside. Now if we remove this trend line and take it out of the way, we want to focus on this lower trend line that I've drawn in here, connecting the two trend lines to those swing lows. We can see that this trend line is now intersecting with the VantagePoint 8-day predicted EMA at 98.27. So our critical level is the 18-day at 97.66. But again, right now, 98.27 is a very important level that we need to hold above, which is right here, just to draw everybody's attention to it. Now, I'll also point out that this looks just like a US dollar index chart. We can see the US Swiss franc, the long-term predicted difference from VantagePoint, moving into overbought territory, as is our predicted RSI. We can see the last time this happened, and we're flattening out. This appears to be getting ready for a move to the downside. So midweek, be very cautious with longs here. We stay long while above 96.77 and 98.27. If we push below 97.66, we are going lower. So that's the number you guys want to watch. Very important, and basically combining the key VantagePoint indicators can be a very, very powerful trade setup. Now, as we go into the British pound US dollar for next week, as I had talked about last week, that if we break through that all-important 144.44 at the beginning of last week, that we want to get those longs in there pretty quick. We had a very nice move up here. However, we haven't retested this 147 area, which is a bit of a concern, and you can see this big sell-off here. Now, as I zoom in the VantagePoint charts so everybody can see it, we want to make sure we're utilizing that the key VantagePoint levels on the AAA cross. 144.66, which was resistance last week, is actually now support for this week. We've closed the week at 144.98. So again, we want to watch these levels and understand where those levels are. The 18-day predicted moving average is this dark colored blue line. We can highlight it here and understand exactly where I'm getting these levels from. Now, our neural index is down, and our predicted short, medium, and long-term differences are somewhat mixed. But again, we still hold at above the 50 line on the predicted RSI, so we're not in a trend reversal situation here yet, guys, just to be clear. So we're going to see how this one plays out, but to start the week, you're going to see a lot of activity around 144.66. While below it, shorts carry the edge. While above it, longs carry the edge. I believe we will continue to start buying this one by, again, Tuesday, Wednesday. Once the smoke clears and everybody settles down from the Fed rhetoric that they're leaving the door open for a rate hike, that doesn't necessarily mean that the currency is going to continue to make gains based on that. Because once again, you can see we've had a pretty substantial sell-off on here, but the pound dollar actually, I believe this to be a true price right here. The pound dollar actually rallied off of the Fed statement while all the other currencies sold off. So always look for that needle in the haystack, and you can see that the intermarket correlation here, that the British pound is not highly correlated to the dollar index. It's the euro, the Swiss franc, the yen. These are the big ones. So right now, this tells me this was just profit taking on Friday, and we likely will hold above 144.66, and longs there to start the week are still reasonable. Okay, but if we lose that area, we stay below that area, we close below that area for, say, Monday and Tuesday, then the longs are off the table only at that particular time. So the critical thing is to know your levels here, guys. Now, as we move into the dollar yen, the dollar yen is, once again, when I talked about that last week, the first thing we want to look at here is, did we break through the levels that I talked about last week? Yes, we did. But when we broke through this level, I also warned about a secondary level, which is this trend line resistance, which comes in at or about the 110.80. So we need to break through that level. Now, our neural index here is positive. Our predicted short, medium, and long-term differences are starting to flatten out. You can see that they are not pointing up. So this little block of indicators right here are very, very important, guys. Okay, now of a further point concern, we can see that I could almost look at this area right here. Sorry, that's a terrible line that I'm drawing in there. Let me put that back in. When we start to move into overbought territory using the predicted RSI, it's starting to move lower. So we're losing upward momentum here. Okay, so the majority of the gains that happened were after the Fed minutes on Wednesday. The dollar yen really has not made a lot of gains since. So that is problematic. So to start the week, again, you're watching this trend line area very closely here. We're also keep an eye on the neural index. But in my respectful opinion, the dollar yen, remember, is 90% correlated to your global equity markets. So if the S&P starts selling off, the DAX sells off, the Nikkei sells off, then dollar yen only has one direction to go, and that is down. Okay, so we have to keep an eye on those things, and you don't have to by keeping an eye on them. You can simply Google. If you don't have access to live S&P 500 charts, you can simply go and Google it. That's just as easy. And see how the S&P 500 is doing on the day. See how the Nikkei did the night before if you're trading in the morning. These are very easy ways to trade the dollar yen. The key vantage point level for this to start the week is going to come in at or about the 109.06 area. So we know our level long while above 109.06, but we have to make sure we're closing above these at least two of the three key vantage point levels. The 8-day predicted EMA and the 18-day predicted EMA. They are 109.40 and 109.06. If we lose 109.06, guys, this level, shorts are definitely on the table, and you can see that this area down here is wide open for shorts. Okay, so potentially a very good trade to start the week right here off of that 110.80 level if the equity markets fail. If the equity markets do not fail, then shorts are off the table. Now, as we come into our US CAD pair, talked about this one last week, about the key vantage point level last week at 128.23. The market, you can see, we're going to bring this up just to make sure we can identify this, that the market came all the way down to the vantage point 18-day predicted EMA on this bar right here, kissed it, and then went from 128.23 all the way up to where it closed this week, just above the 131 area. Very strong close, 131.11, excuse me, but it did hit 131.60. So by watching last week's video and understanding these key levels, there were several good trades off of the key vantage point level and off shorting off the trend line at the 128.90 area. So once we broke through the 128.90, US CAD made a pretty strong move to the upside. Now, our primary indicators here, the vantage point predicted differences, the neural index, the predicted RSI, still look pretty good. The RSI doesn't look great, actually. It looks pretty good, but we're getting a little bit overbought here, which could lead to a downward move. So we want to be a little bit cautious. Right now, guys, the key vantage point level here is 129. So once again, above 129, we're long. Below 129, we're short. That other key level that I talked about here, 129.72, the 8-day predicted moving average. These are two of your key levels with Vantage Point, using them as, again, pivot support or pivot resistance. So once again, I'll point out 129, 129.72. Watch these two levels very closely because they are potential long entry points. If we break through them, then they are short entry points. But right now, our predicted differences are still, again, holding in there, but the predicted RSI is a concern for next week. So right now, a little bit more of a concern that I have too, that I talked about last week, that, I'm not convinced that we're going to necessarily going to get past this swing high. So this swing high comes in at 132. What I want to basically advise everybody here of is be very, very cautious on Monday. Okay, US Canadian pair, I'm domiciled in Canada. I know this currency. It tends to make a big push on Monday. So here's a forewarning for you guys. Monday is a holiday in Canada. It's Victoria Day. So the price you see on Monday is not true. The real price you will see on US Canada is on Tuesday. And in a number of cases, US Canada has made the bulk of its gains, the bulk of its move, whether it be to the upside or the downside, on the Monday, and that is the low for the week or the high for the week on the Monday. So Tuesday keep an eye and remember what I've just said there. So we need to push above 132, but just because we get above 132 on Monday or even on Tuesday, that could be it for the week, and then we could be going into a retracement mode back down towards the 129 area on this particular pair. Now, looking at our final two currency pairs, the Aussie US, I had drawn out the trend line on that for last week, coming in at about the 73.50 area. We broke through that. We've aggressively moved lower. The next big move here, guys, on this particular pair is going to be equity driven. Now, if the equities recover and they start moving higher, then the Aussie US will move higher, New Zealand US will move higher. But if the equities sell off, these two currencies, meaning the Aussie and the New Zealand, are going to be affected by this, and to some extent the CAD will too. So the key vantage point level going into next week, which is very, very important that we focus on this, the 18-day predicted EMA, 73.67. So last week that was again a number we were still looking at. That is now our clear resistance point, 73.67, which is this key vantage point 18-day predicted EMA. Now the 8-day, which is equally as important in my respectful opinion, is 72.71. So we're looking at these two areas of resistance and whether they can hold. So to start the week, that's potentially an area to sell into. Now if that area breaks and we go higher, then we can get longs in. That's no problem, but it will take the equities moving higher, commodities moving higher, but really the S&P 500, very high correlation right now to the Aussie currency. We can see that again in this block of indicators down here, which is comprised of our neural index, our predicted short, medium, and long-term difference, and our strength indicator are basically starting to turn back up from oversold territories. And you can see that our predicted RSI also starting to recover, but they are still in a technical downtrend here. So that's the key thing I want to point out. As long as you know your levels, and again to start the week, 73.67, 72.71, this is your resistance area. You can see that we've closed at 72.21, so we're not that far off those areas. So I would be looking for a retest of that 73.67 area, but if the equities sell off, it is going to drop rather quickly, to say the least. Now, the New Zealand currency not looking quite as bearish as what the Aussie currency is. What we're looking at here is we are still holding above this key support level that I talked about last week, this trend line support, which is coming in right now at or about the 67.15, 67.20 area. So longs carry a slight edge why we're above this level. You can see that our neural index is in agreement with what I've said. Our predicted short, medium, and long-term differences are very conflicted here though. Now our predicted RSI starting to come up out of oversold territory at 39.6, but we need to get this number back above 50 here, okay? We want that RSI above 50 if we're going to start aggressively buying this. So right now we still sit in a technical downtrend while below the key vantage point 18-day predicted EMA, which comes in at 68.10. The additional critical level that I always like to point out is 67.77, the vantage point 8-day predicted moving average plus 2 days out. So these two levels are very, very important to start the week on New Zealand. But again, it will be dependent on what happens with those equity markets. If the equity markets sell off, New Zealand US is going to sell off, Aussie US is going to sell off, dollar yen is going to sell off. So you Forex traders, you're trading equities. You equity traders, you're trading Forex. So the key thing here in going start the week is get your trade plan set up, know your critical levels, and with that I'm confident that we will all do quite well in next week's trade.